of our just-in-time trainings. Everything's running together, but I think this is just-in-time number 2. Thank you all for joining us this morning. I am really excited to be able to bring you this session facilitated by Robert and Christine. They are really the gurus when it comes to this subject area. So I'm excited to be able to learn from them about cash flow planning. Just a couple of housekeeping items. I know we are all probably Zoom pros by now, but you should be automatically muted and your video is not on. If you have a question for the panelists, please use the Q&A or the chat function below. Abby and I will be monitoring those. And so we'll make sure that your questions get answered. If we run out of time for whatever reason, still entering your questions into that chat or into the Q&A feature will help us make sure that we get you the information you need. So thank you all for being here. Without further ado, I think I'm just going to turn it over to Robert and Christine, and my dogs are just about to freak out. So I'm going to mute.
Good morning, everybody. I'm Robert Patterson, and I'm the CEO of Kids Can Community Center.
And I'm Christine Hull. I'm the Administration Senior Director at Nebraska Appleseed. I do think we need to correct one thing. Rosie said we are not gurus, but we are making our way through this just like everyone else. So
I will second that. I'm more the cheerleader and the CEO, sometimes asking dumb questions to Christine. So.
But I have been a CFO at organizations ranging from 2 million to 30 million. So have weathered some mini crises in there, and certainly we're all getting through this major crisis right now.
So as we begin today, I think we just have to acknowledge, and I've been talking about this obviously for now a couple months, that we are navigating new waters here that some of us haven't experienced. I guess most of us have not experienced, or we really even kind of planned on. I've talked a lot about how nonprofits have been really good about planning for rainy days. We certainly haven't planned for rainy months or even a year span, as we're kind of looking at on what we need to do. So where we used to talk a lot about sustainability, a lot of us now, and a lot of smaller nonprofits are talking about shifting to survivability. And so one of those things that kind of means for us is to kind of relook at our budgets, take a better look at cash flow, something some of us have not really had to do too much before, and kind of see what we can do together to kind of help figure that out. So as Rosie said, I'll be kind of monitoring the chat box as we look for questions, but we left a lot of time at the end kind of for Q&A because we know that's where a lot of the robust discussion happens.
Yeah, and in this webinar, we're going to be giving you some strategies, but that Q&A, feel free to ask questions throughout because, every situation is different and we're all experiencing this on different levels. Some, I know some organizations have totally closed, some are fully working from home, some are doing some modified. So please feel free to ask those questions throughout.
So kind of here's a little bit of rough agenda of the topics today. We're going to start talking about net income versus cash flow, how we kind of understanding where your current cash position is and kind of creating a detailed cash flow after that. And a little bit of talking about how you could be accounting for the loans for the SBA PPP loans. There's not a whole lot of formal guidance about that, but we have some thoughts about how you can begin to at least start documenting what you need to do. And then we have a few strategies when you're expecting a cash shortfall, but this is where we'd also like to open it up and kind of see what other people's ideas are and how creative people are being in their organizations.
All right, so before we get to kind of looking at what your cash flow is, we felt like we needed to take a step back and talk about what is cash flow. When you're looking at a financial statement, does that mean that's what your cash is? So we're just going to go through some examples to kind of talk about the difference between net income and cash flow. So most organizations are on an accrual basis accounting. So that means that you record revenue when you earn it, when you get that grant, for instance, and expenses when they're incurred. But an alternative method, and one that some smaller or new organizations are able to use, is cash basis. So that means I only am recording revenue or expense when I actually am getting money or giving money. There's no other entries there. So if we're using the accrual basis, so we're recording based on fund accounting rules, your net income does not mean your cash flow. They are two different things, and we'll talk through why later. But if you are using the cash basis, then your net income equals to your cash flow, because you're only recording things when you're getting or giving cash. So we've got a poll for you. So we wanted to see, does your organization use the cash or accrual basis of accounting?
I was going to try to vote myself, and it says the panelists cannot vote.
Sorry, I didn't check that for you.
No, it's okay.
All right, looks like we almost have everyone. So if you haven't hit it yet, hit it quickly and I'll go ahead and close it.
Okay, so as suspected, most of you are on the accrual basis. So what we're going to talk about later will be, be necessary steps you have to take to think about your cash flow. It seems like we have one on cash basis and a few who are on no idea. So come along for the ride with us. All right, so we're going to do just two examples, again, to talk about cash versus accrual basis. So on this example, an organization received a $25,000 corporate sponsorship in June 2020. So we could think about right now, if I was to get a $25,000 sponsorship, I might be pretty excited about that. That's money coming in the door. But this sponsor has given a pay schedule of paying in 3 installments. So if we're looking at an accrual basis, which is what you're seeing here, on accrual, we record revenue when it's earned, and it's earned when we got that sponsorship. And so in June, we would show $25,000 of revenue. But looking at a cash basis, it shows a little bit of a different story. So these are 2 years showing when that sponsor is giving their payments. So you can see that if I'm looking at, I'm going to go back. My net income on accrual basis is $25,000 in June, but in June on cash basis, it would be 0 because I have not received any cash. So that's important to think about, because most of our budgets are done on an accrual basis. And so when you're trying to live through a pandemic and look ahead to what you have coming in the door in the future, you can't just look at what you have budgeted because that doesn't take into account payment schedules.
I see this a lot when you see grants that are pledged, but not actually received as actual funds. And especially multi-year grants, technically for accrual basis, if you get a 3-year multi-grant, it's all booked in that whenever you first know, and then when you actually get the money comes at a much later time. So as an accrual basis at KidsCan, there's a lot of things that we had to kind of rethink of what's the actual dollars that are coming in versus what we booked at the time.
Now we're going to look at an expense example just to show that same thing. So this is an organization that purchased a directors and officers insurance policy, which we should all have. So if you don't have one, you need to talk to your insurance agent. So they are required to pay for that entire amount, the whole premium up front, but the policy term is for a year. So again, if we're looking at an accrual basis, the expense, sorry, these are switched, I'm realizing. If we were looking on a cash basis, which is the top, I apologize about that, we would be showing an expense right away of $23.68, which was the premium, because that's cash that we had to pay up front out the door. But if we were looking on an accrual basis, which again, I'm sorry that these are switched, we tried to put this together quickly to get it out to you. We would actually show expense tied to each of those months. So each month we would record 1/12 of that premium because we're tying the expenses to when it's actually incurred.
That was just a test to
Yeah.
see who was paying attention. So when we're talking about kind of cash flow planning, we really need to talk about what is some of your most immediate needs as an organization. And when we talk about cash flow kind of forecasting, you need to determine what your time frame that you want to use. If you know that you're going to be expecting a shortfall pretty quickly, you might need to go down to kind of a weekly time frame to kind of parcel out where you think you're going to run out of money, or where you're going to need to take line of credit, or you need to make sure that loan is coming in. If you know you have a few months of cash flow, you could maybe do kind of a monthly kind of reforecast just to kind of see how you're doing. But when you're looking forward, you need to kind of if it's going to be 5 months, you need to kind of parcel that out. What's going to change? What's going to not? Most of us have pretty good monthly budgets, and I know if you're like me, a lot of those budgets kind of feel like I've just kind of tossed them out because nothing is the same as it used to be. But I am using that as kind of our framework to say, what's real, what's going to happen, what can go, and then kind of adjusting for any kind of other expenses that kind of might happen along the way. The other thing I kind of made notes for myself is just to do a reality check for each line item. You need to, this is the time to kind of double check. Is that real? Is this an accrual? Is this cash? When's this going to happen? Is something not going to happen, or something going to change? And then just continue to make adjustments. For what we did is we had an accrual budget, and I just shifted everything to a cash budget just to see what it would look like, if that makes sense.
So in that revenue example we showed earlier, for instance, instead of showing all of that in the one period when it was received, Robert would be, or most of our organizations as well, are trying to figure out when would that actual cash come in the door, to make sure we've got cash to continue operating, and to understand what our future is, to be able to make some decisions. So
another thing I was thinking of is that sometimes cash comes in. So let's say we get $50,000 for our summer program. That may not be happening. So technically we have that cash, but it's kind of restricted for something else. And so that's something else that you need to think about for stuff that is restricted, that technically you do have that cash on hand. You might not be spending it how you originally anticipated you would. So something else to think about in the longer term, or if you need to go back and visit that particular funder and say, you need this unrestricted, or it would help to kind of carry this over.
So when you're determining your time frame, you might not know where to start. So we're going to give you a few calculations to help you figure out how long do I think I have until I might have a problem. And again, these are things in normal situations where, we would expect there is going to be a certain month when you're going to run out of cash. But at this point, during the pandemic and with revenues impacted, it's even more important to understand now how much cash do we have and how long can that last us. So the first one we're going to talk about is the quick ratio. So this can help you understand of the cash you have on hand, how long can you sustain yourself with that? So the way you calculate this is you look at cash and cash equivalents. So that would be something like a CD that can easily turn into cash. And then you add in accounts receivable that you have coming soon. So not a long, I wouldn't add in something that's coming in 2 years, but your regular accounts receivable that you're expecting. And then take out any of that that's restricted for purposes. So let's say some of that is restricted to a sub-grant to another organization. You're going to take that out because that's not cash available for you to use. And then you divide that by your typical month's expense. So that includes your staff and your salaries and benefits and rent and all of the things that are typically occurring for your organization. So that will get you a number of essentially months that you can go without having anything else coming in the door. So that this assumes what you have right now, not looking at future grants or future contracts or anything.
Christine, is this particular ratio, is this what's commonly used when people look at the 990s as well, or?
Yeah, this is not just a pandemic ratio. This is a common ratio. Actually, for-profit companies use it quite a bit as well. It's really showing how liquid are you, and yeah, how much can you weather. So I know for a while we've been telling nonprofits that 3 months reserve is best practice, at least having 3 months. So in that situation, your quick ratio would be at least 3 and hopefully a little bit more. If we've been saving for a rainy day, this is it. So so yeah, it is a useful thing to look at all the time. For instance, if you look at a quick ratio and it's very low, funders might start asking questions in normal times about how you're sustaining. So this is really just helping. Again, it's kind of that, how much do I have to, what's my savings to be able to weather. But we understand that we're in a different situation now, and some organizations are really trying to figure out how, you know, if I'm a performing arts center, for instance, I don't have any revenue coming in, but I'm really trying to keep my staff on payroll. We as nonprofits have all, I know, been trying to make sure that we're taking care of our employees during this. So this is another way to, it's kind of a modified quick ratio. So this is the same numerator, so your cash and accounts receivable that you have coming in, but instead of looking at typical monthly expenses, we're looking at pared down expenses. So what are your typical payroll, if you're planning to keep your staff, even staff who may not be working, in my example of a performing arts center, for instance, what's their payroll, health insurance, and any other benefits that that you're required to provide through them. And then adding in as well rent and occupancy, those things that you're still having to pay even though you're not operating. So this is really trying to pare down to what is the bare bones of taking care of our staff and those contracted expenses that we have.
So this is kind of the keep the lights on, bare basics ratio. And we realize this is math in the morning, which we're not always at our best kind of in thinking through. So I think these slides, and this will be recorded as well. So if anybody needs to go back to this, all this will be there.
And you're also, I'm not sure, again, because we put this together quickly, I don't know that do we have our emails at the end, Robert?
No.
No. So, but
it's all a big secret.
But we can, I mean, we're always happy to help. So if you have questions later, reach out to Abby or Rosie, and I'm sure they can get you our way.
I'll put our emails in the chat box.
All right, so the next slide is going to look scary, but it's not intended to, and we don't want you to spend a lot of time looking at the numbers. We're just trying to show you what this could look like. So if I've done my quick ratios and I determined I have maybe 2 months is how long I feel like I've got cash coming in, that's where Robert was talking about determining your time frame. So I might then be looking at a week-to-week basis, and I'm going to take my budget and do accrual adjustments to get that to cash. So this organization that we're going to look at in a minute determined that they thought they had about a 6 months period of cash, and so went through and did a cash forecast based on what they knew they had coming in and whatnot. And again, lots of numbers. We're not trying to like go through what these numbers are, just trying to show you that this organization, because they were looking at 6 months, starting in May, they did a forecast out through the end of the year. And looked at what cash, that not accrual, but what cash they thought they had coming in from their various revenue sources, and then what cash they knew they had to have go out. An important piece of this, I'm going to highlight the bottom now. An important piece of this is knowing where their prior month's cash was. So if you look at the kind of orange highlighted cell, that was the bank balance that they had at the end of April. And from there, they were accounting for anything that wasn't taken into that bank balance from through the end of April that they knew had gone out of cash, and then looking forward. So in this situation in December is when they were expecting a cash shortfall based on what they had coming in and going out and their current cash. And so that's when we would start to apply some strategies to figure out how we're going to not get negative in December, because clearly that's an issue. But also as they're getting nearer to December, if this cash forecast is showing up the way they expected it to, that's when they might change their time frame and be looking at a week to week what their cash position is, or even a daily cash position.
And that was one of my questions when Christina and we were talking, is when you draw that hard line in the sand, let's say today, April 30th, knowing that you will still have a few outstanding checks that have not, as well as some possible funds that have not technically hit the bank. So those are something you still need to take into account for. But the end of the month is probably the easiest place to kind of find that stopping point for cash and expenses.
Yeah, that's right. It is hard. It's hard because of things going in and out of your bank account to get a point that's middle of the month or whatnot. It is really, it's much easier to use that end of the month as that hard stopping point. So, and this is timely because we're at the end of April, unbelievably. So that's a good way if you're looking forward and doing a cash forecast that you can start. All right, so we have another poll. We wanted to know if your organization seeked out a loan from the Small Business Association Administration.
We have a few more left. If you guys want to go ahead and vote on your organizations, and we'll end polling here in just a minute.
So as we wait for folks to finish that up, that organization that saw that they were going to have a shortfall in December, there are some strategies they could use. One of them is that current, the PPP loan that's available right now. So, okay, it looks like we had almost 75% received a loan, and then another 11% are applying or waiting to hear back. So that's a strategy. And there was a lot of national advocacy to include nonprofits in this. So this was a big deal that nonprofits were included in this stimulus. So I'm glad that those who have needed it have been able to take advantage. All right, so we are going to talk briefly about some things to consider if you did receive a PPP loan or one of those 11% who are waiting to hear back. And then we'll talk about some other strategies. And you know, it's harder to do this over a webinar than face-to-face because Robert and I do really love learning from you all and hearing from you. So as we're going through this section in particular, please feel free to use that chat box to share your ideas. So if you did receive a PPP loan from the SBA, so this is the Payroll Protection Program, and this was intended to support employers in keeping employees on staff. So it really is focused on keeping your employees paid. And so if you utilize it for specified purposes, so including keeping your employees paid and rent and utilities, the loan may be forgiven. I say may there because we're still waiting on guidance on what that looks like, how the forgiveness process works. This was a really fast moving program, and so banks are still figuring out how to get loans out, and then I think later are going to figure out then the next step of it. But once you receive funding for this program, you have to use the funds within 8 weeks on those specified purposes if you're going to request forgiveness. And I know that NAM had a session, if you're ones who aren't applying and might need to later, I know there was a session earlier this week on how to actually apply. So we're not going over that. We're talking about how to account for this. For the forgiveness, up to 25% of the loan can be utilized for rent and utilities, and then the rest must be used for payroll costs. And that does include required benefits like health insurance. So one thing to think about with this is not to double dip with current grant funds. So if I have a a funder that's funding one of my programs, for instance, I can't then use these federal funds to also try and fund the payroll for that staff. So in that situation, I know a lot of our funders have been great about reaching out and saying, do you need adjustments? So it might make sense to ask if you can extend the grant for those 2 months, 8 weeks essentially, for example, to be able to utilize those funds.
This will come up specifically for program restricted or project restricted grants. So something that we're looking at is like we have a couple kind of contract kind of grants that are, they specifically say we're getting reimbursed for these staff or these employees. So that would be the most apparent where we would have to either one, work that funder and say, can you unrestrict, or that part will just not be eligible for the forgiveness part of the loan.
And if you're in that situation where it's not all eligible for forgiveness, it's still a really good program. Once you start having to pay back on it, it's a 1% loan, which is really a really low rate to be able to get us cash right now. So yeah, I wouldn't, it's just really important to be tracking and making sure that when you're asking for any of it to be forgiven, that you have not also used restricted funds to pay for those same amounts. So tracking on this is critical. Again, there's not a lot of guidance that's, we kind of are getting guidance in little bits here and there from the government, but it is best practice to keep these funds in a separate bank account. I know that that's not always feasible if you don't have one, another account as an option. It's really hard, especially since we're all working remotely, or some of us are working remotely, to open up an account right away. So in that instance, maybe there's a savings account that you don't use as much. Maybe you're going to use that to be your tracking mechanism and be your in and out for that. One thing to, go ahead.
I was going to say, because we, like everybody, we had to connect, it was quickly kind of an overnight, get this loan in, and you weren't going to create a new account, and the funds were kind of put there already. So we didn't have a separate bank account, but we are treating this as a restricted grant as a way to track it and to make sure that we just have all the documentation, and we're kind of be pulling from that as you would like a typical restricted grant is what we're doing at Kids Can.
Yeah. So yeah, I mean, figure out how the best way is to track that. I think that's a really great strategy of treating it the same way you would treat any restricted funds, so that you're making sure that you're tracking everything you're doing on that. I know for us, we do have it in a separate account and are drawing on that account each time we have payroll or rent to have some sort of an audit trail on that. And then our bank, again, all banks are going to have different things for this until the guidance is clear, but ours did send out a tracking sheet of like, here's what we will expect to see at the end of it. So this is one of the things where I would work with your bank to see if are there any restrictions that they want to see on how you're tracking that. And then the guidance is still a little unclear on this, but it is possible that the loan forgiveness on this would be treated as a federal grant. And so you do want to keep in mind that you may be subject to the government's single audit requirement. So what that means is organizations that receive over $750,000 in federal grants have to have another audit. It's called a single audit, and that has to be done annually. It's not a super fun process. I've been an auditor on it and have gone through it on organization that got a lot of federal funds. So it's just it's a little more intense than a normal audit. But if you were an organization, for instance, that had before coronavirus came into our lives, had $500,000 of federal funds. And then let's say you maybe received a $300,000 PPP loan. Just know that that may be considered that now you're over that threshold and would need to get a single audit. So we're not offering advice on that because, again, the guidance is unclear, but I would contact your own CPA firm with questions about that. So for those of you who were able to utilize this program, in that cash forecast that we looked at, this is cash that then came in the door right away. So we would adjust our cash forecast for, in that $300,000 loan situation, for instance, we would have 300,000 coming in April or May when that loan came into effect. But I would caution you, if there are pieces of this that will become a loan and will not be forgiven, make sure you're planning ahead to the payments of paying that back when you're looking at cash going in and out.
Christine, do you recommend that kind of create a new line item or field for this loan?
Yeah, most definitely. And so one of the so the way that this loan gets recorded on your books is it's a loan right away, because that's technically what you've taken out from the payroll protection program. And then the amount that would be forgiven, you would record as a grant. So you would kind of reduce the loan by that amount and record it as a grant. I think for in terms of your budgeting and your board who are going to be looking at the financial statements, it's a little confusing to see, like, okay, we had this huge jump at when that grant was forgiven. So yeah, I mean, I think for ease of use, it might be helpful to have that as showing as a separate line, and that helps you next year. Hopefully when we're in a more stable situation, that helps you to know, like, that's not something coming back. So you're not, some organizations budget based on what they had last year and, you know, increasing it X% or whatnot. So you want to be sure that you realize that that was a one-time extraordinary thing. So if you have any questions on the payroll protection program, I'm not seeing any on the chat, so please feel free to share those or your success stories with it. I know it's been a critical source of funding for a lot of nonprofits. All right, so we've done a cash forecast. Hopefully, if we needed it, we've worked with our bank to get a payroll protection loan. But what if we're still expecting a cash shortfall?
There's a lot of different strategies out there, and so we're going to share a few as well, but we'd like to also kind of hear strategies. You can kind of type them in the chat, or if you have a really good one, we can call on you. But one of the other things that we've talked about is that we've had some additional expenses at this time. So we kind of doubled up on our sanitation here at Kids Can, and so while some expenses have gone away, some expenses have gone up. So that's something else, just to kind of always remember, it's not always beginning to, you know, just cut everything. Sometimes we're going to be adding back more than we usually have. Really looking at what the critical expenses are, and this is kind of what you really need on a daily basis versus the nice to haves. And so your computer might be way out of date, but maybe that's something that if you can shift another year, or what are the things that can you either delay or defer to another time. So there's a few things that we looked here at our organization to say, let's shift that to, you know, next fiscal year and kind of see if we're in a better place.
Or things that are, you know, for us, for instance, keeping our staff at their same salary level and benefits was like, that was a first priority. But we have some other nice things, like we do, you know, periodic staff lunch, and that's a time for us to socialize and whatnot. And we're obviously not doing that because we're not in our office, but if we were, that's something that if looking at cutting for upcoming cash shortfalls, that's a nice to have. It's great. It's something we want to keep doing, but maybe not right this minute when we have cash issues.
Absolutely. There's certain things that, you know, you're locked into, your lease, your utilities. There's things that will just not go away kind of no matter what's going on. Those are the things that you really need to make sure that you're accounting for. But then we also looked at, say, our food vendor for, you know, there's certain contracts we canceled or we paused in the interim because we don't need those expenses going out. So we understand it's not good for that particular company. They're also losing revenue, but as a nonprofit, when every penny has counted to begin with, at this time they kind of really do count more than ever. With different vendors, they're also, you can request new payment terms or payment plans. they don't want to lose you as a customer. So if they are open to kind of having different options to say, you know, can we defer these payment towards the end of the year? So it's one of those things that will help in the short term, but you have to remember that if you do defer that to later in the year, you're still liable for that. So you hopefully will all be in a better place as we end 2020. But just because you're deferring it does not mean those payments go away.
But that is a place where you can, I mean, having that cash forecast is really helpful. I actually think of a situation where I was on a board and they had some cash, a cash kind of shortfall. They had some funding that didn't come through, and they did a regular camp for kids, and so they were able to do a forecast and say, okay, we know we have more money coming in at this point, and so they were able to work with the camp that they always rented from to have this with kids, to show them, like, here's when we think we have this coming back. And so since that was a relationship we had with that camp for a while, they were able to help us out that way. So this is really where it does become important to have a sense of when you think you might be in a different situation.
Absolutely. One of the fortunate things, and being in the greater Omaha area, Nebraska, that we are in a highly philanthropic community. So we have a lot of people paying attention to our needs, to the needs of the nonprofit. So just there's a lot of ways to kind of state your need, whether it's on social media or reaching out directly with your current foundations. But our experience, my experience of my peers have been, they really are listening, and they are stepping up to do what they can. They can't write cash checks for everything that for every nonprofit, for everything that we possibly, but they are making sure that they want to make sure the programs and those that are most vulnerable, a lot of the people that we're serving are kind of being, their needs are being met. So don't hesitate. This is the time to reach out, and this is the time to really kind of project your needs and where your organization is at. I've been sending out at least about every 4 weeks kind of a note to just our stakeholders and funders, kind of just say, here's what's going on, if I need anything in particular, or if we kind of need some connections as well. And everybody's been really receptive to that.
And additional funding for nonprofits, often that looks like, you know, individual donations or grant funding, but also remember that loans are an option. So that PPP loan, that's why we talked about that. That is an addition. That is additional funding coming in that can help with that cash shortfall. I know one of the comments we got was that one of the larger banks was really hard to work with for the PPP loan. It's interesting, Nebraska is actually one of the states that got the most loans out. I think I saw that one of our banks was like the top 1 or 2 of getting those out. So this has been a time when I think folks have had some better luck working with smaller, more regional banks who could be more nimble in this plan. So that's something to keep in mind. But you know, a line of credit is another option, not tied to the SBA loan process. So you know, if you own your building, for instance, you're doing a kind of mortgage line of credit on that might be an option. So that's something that you can chat with your banker about if you are in a need for additional cash. But again, that's a situation where the bank's going to want to know what's your plan moving forward. So, and in that, we did have a question about when would I do a budget? When would I adjust my budget? And that is, that's different for every organization. So some boards might have set aside guidelines for when a budget might need to be adjusted. Let's say if our expenses are falling 10% less than it looks like, or our revenue looks like it's going to be 10% less than we had expected, the board needs to know about that. I would echo what Robert said about communicating with your stakeholders. This is really a time for CEOs and executive directors in particular to be in regular communication with your board to let them know what's going on. And yes, I would say that especially if you're expecting a cash shortfall within this budget year, that it's probably time to take a look back and figure out things that might need to be cut, additional funding, and take that back to your board. So it may be that I know that some organizations have had to close down some of their programs because of lack of funding due to coronavirus. So that might be a time to go through and do a budget adjustment so you can figure out what your strategy is moving forward.
So we had a question, if you're applying for current grants, and thank you for saying that grant writing has not stopped, that we continue forward. A lot of them have not changed their deadlines. Do you suggest presenting the budget as that it is now or in the process of readjust? So what we are planning on doing is, I'm going to do a little bit of both. I'm going to say, here's our original budget, but knowing, here's a slightly reforecast budget, and knowing that reforecast budget, that's not perfect either, but just to kind of show, here's where we originally thought we were going to be when we, started this fiscal year, and here's how we think the new version will look. So we're doing a little bit of both, but when I do that, I put a big asterisk saying this is just the reforecast budget is typically, it's not voted on by the board, but it's kind of up to the executive director saying, here's how we think we're going to end. And there's nothing we will all do our best to try to continue to end in the black, but this is the year, as Christine said, that we will be counting on those rainy day funds to kind of pull us through or get us to where we need to be.
Yeah, so typically, if a grantor is asking for your budget, if the board has approved a budget, I would still be providing that budget. And then, like Robert said, offering changes to it. But there are situations where your board might say, we're going to redo our budget. And so if the board re-approved a new budget, then that's what I would be providing. I actually, years ago, worked for an organization that was very large and had many moving pieces, that programs where we would do a budget adjustment every few months because a new program might have started or a new program might have ended from our last budget. And so that's something to know for your organization. You're not locked in. If you just budgeted, you're not locked into that for the next year. Like, the world has changed. And so that might be the time to readjust and talk with your board about doing a budget adjustment. There was a question about holding off on raises to save jobs. Robert, did you want to chat about that one first?
Yeah, as we're looking forward, there's a couple of things. There's a lot of, we're 8 weeks into this, and I know it feels like we're 8 weeks into this, but there's enough unknowns, especially in the short term, that as our organization, I haven't made this public, so hopefully there's no kids camp employees on here. Yeah. But my plan is that we just need to freeze in place. I don't want to cut anybody's salary to make it, but I also know that we just don't really have the, I don't foresee us having the extra funds to kind of be able to give people raises at least in the next 3 to 6 months. However, we begin to end kind of throughout the year, I think I will feel more comfortable as an organization knowing that we have that money there. But we're not. I'm not sure what anybody else is doing on it, but that's kind of my stake.
Yeah, and I think that this is where communication and transparency with your staff is really important, that you're all in this together. If you had agreed to raises and those haven't happened, that is an option if you, if you're having a cash shortfall. But I'd be really clear with your staff on what the plan is and at what point you're going to reassess to make sure that, they know what your plan is to look out for them. But yeah, raises right now is something that every organization is going to have to figure out in terms of what's your comfort level and when would those go into effect. So I know for us, typically our raises are at the end of the year. So we'll have a better picture at that point of where we're at. But if July 1 is when your raises typically went into effect and you are seeing effects of coronavirus on your budget, it is probably time to say, okay, we're either not doing that this year or we're going to hold off because, in my mind, top priority should be preserving current funding levels and in terms of their salaries and benefits. I also know some organizations have cut some benefits. I know of a larger nonprofit here in town who suspended their 401k match, for instance. And so you know your employees best and where they're what is most important to them and their personal situations. And so those might be other options. You know, are you offering some voluntary benefits that might not be well used, for instance, maybe looking at those versus cutting salary or not raising salary. I will put in a plug that the NAM salary and benefit survey, I think today is the final day to get in that information, but that's a useful tool to understand what others are doing in terms of what projected raises are and that sort of thing. So, but yeah, I would definitely be talking to your board about, you know, if you're regularly raising salaries and you have to hold off, developing a plan for that, to communicate that with staff, and then to, again, be clear about when you're going to relook at that.
This is time to kind of be creative and necessarily raises. This doesn't help their kind of paycheck, but giving them extra PTO or vacation time because not only do they need it right now, we know they're going to need it in the next few months. So, I think another thing that this is kind of in the opposite direction, but for our employees that are currently working directly in programs and in direct care, we're paying time and a half. So I know that new expense for kids can, but I also recognize that some employees are working on the front lines, and I want to make sure that they are compensated. And then me as a CO, I'm going to need to deal with the finding the funds to make sure that everything kind of evens out. But that's something that we're doing as well.
Yeah, I mean, we started off talking about we're in a survival mode right now. Most of our organizations are trying to survive, but your staff are a critical piece of your organization. And so I would advocate for, one, keeping them on staff and paid if you're in a situation to do that. I think Robert's step of offering essentially hazard pay for those who have to come in is a good way to appreciate that work's being done. But yeah, when you're looking forward, you know, I know for us, as I'm doing a forecasting, our staff that's our largest item. And so it seems like the one to cut first, but that's the one I'm going to cut last if needed. So I look at all those other things first before touching those people, because they're those people's salaries and benefits, because that's the most important part of what our organization is.
I haven't said hazard pay because that sounds too scary.
Yeah.
Other questions or thoughts?
Yeah, and share some strategies. I know we've got, again, organizations in varying, some who have had to shut down totally, some who are still somewhat working. So this is your time to share strategies, and we will share them out to the group. So if you wanted to chat any of those.
And Christine will take all the hardball questions. I was also thinking when you were talking about the single audit, but your current auditors will probably be focusing in on this as well when it comes to time to your regular audit. So when we not only want to make sure we all have the documentation for the bank and to make sure it's for them, but make sure our auditors will also have that information to make it as smooth as possible.
Yeah, I mean, it is helpful to reach out to your auditors at this time and figure out, are there additional things that they might want to see in terms of if you've taken out loans or that sort of thing. I know for our office, because we had to work remotely, some of our internal controls we had to adjust. And so that's something to let your auditor know that, you know, typically this person does this and this person does this, but because we were remote, we had to switch that. And here's how we're looking out for that. So I agree. I also think Robert needs to have a Rob Cameron series. So Abby shared that there was a position that was vacated just as the pandemic was gearing up, that they decided not to refill. That is, that's a really, that's a really good option because it means that while that work still is there and has to be spread out, hopefully that's only a temporary situation. It is helpful. It's easier to have not refill a role than to have to cut a role. So that is something to look at anytime. If a staff is leaving at this point, is that a role that you need to refill, or are those funds that can be used elsewhere?
It's been brought up a couple of times that for people that were in nonprofit around at the time during 2008, 2009, kind of the recession, some of this does feel the same, and we haven't quite seen the repercussions yet, I think, from foundations that depend on their stocks and so forth. So that hasn't quite felt, I don't think we felt the ripples of that quite yet, but a lot of this does kind of feel the same of this is the time to tighten the belt, and that we, as nonprofits, we run pretty lean ships to begin with, and this just kind of makes us kind of have to be even leaner. And there's sometimes, I think Ann Henry's still on this call, that we've talked about nonprofits typically ask to do more with less, and then sometimes we just need to do less with less, and that's kind of the time that we're approaching now. And as Ann shared, that nationally endowments are down 20% for foundations. So as we begin to project forward even further, we know that the possibility of increases from foundations or continually growing, that will probably not happen in the short term. So not only looking at the short term for the rest of this year, but kind of even looking further at that. I don't want to call it bleak, but it's just not as fruitful as it has been in the past several years.
Yeah, I would say as you're cash forecasting, and for those of you who are budgeting or adjusting your budget, there's the kind of current implications of this, but there are going to be future implications as well. And so I'm really thinking about how, your current funders or your current contracts, like I would be doing scenario planning on this. And I know we didn't get into that here because that's a bit more involved, but thinking about, if that funder cuts our funds by X%, what would we do then? So there's the steps you have to take right now based on the current revenue and expenses you have, but also this is a time to be thinking about those kind of, I don't want to say worst case scenarios, but what would our plans be? Because it's easier to have thought that through and have a plan that you can execute if that happens, rather than having to figure that out immediately. I think that's been one of the toughest parts of this pandemic, is that it's something that most organizations didn't have a plan for. And so we're all kind of, trying to go immediately and make changes. And that's tougher than having had some time to think through. So
it's another version of crisis plan that most of us have been getting better at having media crisis plans, but us included, we really didn't have a financial crisis plan that we had really thought out before this.
All right, are there any other questions or items folks would like to share? I'm really looking forward to when Robert and I can do these and be in the same room as you all, because I'm sad to not see everyone's faces and hear from your great ideas. So please share on the chat.
We'll come to your parking lot and do our
yeah. Yeah.
All right, I think Rosie's gonna close us out. Thank you, Christine, today.
Yes, thank you so much to both Robert and Christine for this. This was really fantastic. I learned a lot, and so I'm sure everybody else did too. Thank you guys so much. And I know I just kind of emailed you a couple weeks ago and said, hey, so could you throw this together real quick? So I am so appreciative that you put this together and were able to put together such a quality training. Thank you so much. If you have other questions that you would like to ask of Robert and Christine, their email addresses are in the chat. I am happy to connect you with them as well. If you want to shoot me an email or Abby an email, we're happy to help further. I know this is a interesting time for all of us, and we're all just kind of figuring this out as we go. So thank you. With that, we've given you an extra half an hour in your day, so get outside. It's a beautiful day. And thank you all so much, and have a great day.
Thank you.
Bye-bye, everybody.